louder than normal because this shoots out an error every once in a while if it's not loud enough.
Okay. Is the PowerPoint going to be on the screen as well?
No, you'll just have to do page up, page down. It's not mirroring.
Oh, okay. All right, as they said, my name is Dawn Edmonds. I'm at Farm Credit East. I'm a senior loan officer, and tonight I have the privilege to share with you super exciting stuff on finance. And so we're going to kind of talk about the thing most people dislike the most, and that is the numbers behind the scenes that everybody needs to know, but typically does not like to do. So for those of you who don't know about Farm Credit, we're a non-depository bank, which means that we do not have bank accounts, so no checking, savings, so forth, but we do have loan programs. We also offer other services, such as tax preparation, records, payroll, so we kind of become this one-stop shop for local businesses.
Because of what's going on with our screen. I don't think this is even possible. This is what I mean, where they have to stop questions till the end because it literally pops up in the middle.
Can you put it up in the top corner?
But he was asking you to make her bigger.
Yeah, can't make her bigger.
Oh, so can you?
It makes her smaller.
Can you click the square in her picture?
Yeah, she just goes bye-bye.
Oh boy,
Yeah.
that's a shame. Oh boy.
Change to the side view rather than
Yeah.
the top view, he said.
They're not understanding what our screen situation is over here. That's the issue.
You could take and rotate that so they could see.
The problem is we have break, the other places don't like it because they don't know when to come back. So that's why
Yeah,
I said.
that's as good as it's gonna get. It's gonna slow us down too much, so I'm gonna have you.
And we need
Okay.
the time,
Keep on
so
keeping
just
on.
help yourself
All right.
locally.
So we're going to go ahead and keep going. So farm operations vary very greatly from businesses that only do blueberries to businesses that are vegetable operations that have 30 different crops throughout the year. They may sell just corn or soybeans, and so every business is a little different. Some sell bulk, some sell wholesale. They have a wide variety of products, as you can see here, and then you get into some processed. So the importance of that is it does all of those things have an impact and change how your income's going to come in and things like that. So it's recognizing that farming is different. So the basics of finance, it is simply the management of money. Sounds so easy, right? As a small business, you're typically also the CFO. There are, in most small businesses, not a lot of other people helping you go through all the different components of the business. It's you, yourself, and you. So you're also responsible for the financial success of the business. So why are the numbers important? Let you know where you are, where you've been, and where you're going. So without those things, you really have no idea of how to plan for the future if you don't know what things have cost you in the past and what they're going to cost you as you continue forward. So one interesting thing that a lot of people don't realize is that as a loan officer, my view for what your finances should be is different than an accountant. An accountant's goal is always for you to pay less money for taxes, which shows the least amount of income. As a loan officer or as a bank, our goal is to see the most income because it means that we can give you the most money. So it's something just to keep in mind. A lot of times people tax plan to the point where they're not eligible for loans. So this is a really important differentiation between the two, why we want to pay tax. And like I said, you may have trouble getting a loan if you show too many years of losses. So the reason that profitability is so expensive is that's where you're making your loan payments from. That's how you're covering if you get investors, repaying your investors. It also helps you fund future expansions, so through buildings and equipment, as well as fund future savings and retirement and return on investments. So what I have here is just a few different financial management reports that are used. And everybody pay attention because we're going to have some in-class work. So this is important stuff. So we have profit and loss statements, accounts receivable aging reports, accounts payable, cash flow statement, and balance sheet. And I'm sorry that I'm not looking at the camera. It's really hard without having the presentation in front of me.
We have another technical glitch that we're trying to overcome, but you should be able to see the screen, but
There's
you can't. So
nothing.
just explain
Yeah.
that to the other-
Yeah. So.
Tell that to the mic because they can't hear me.
So the screen, the computer screen in front of me does not have the PowerPoint, so I apologize for looking away. So how often should you review your management reports? So the one thing is, as the primary person managing the business, you're going to want to make sure that you look monthly. You want to see if you're setting the goal that you're going to have $200,000 in sales. Have you done it, or is there no way we're going to make that happen this year? So we need to start making changes now. If you wait till the end of the year, as I said at the bottom, it's too late to make any decisions that can really make those changes for you. Are you keeping on top of your accounts receivables and your accounts payables? If you don't pay your fertilizer guy, you might not get any more fertilizer. If you're not collecting your money, again, you may not get your fuel delivered as you need it. And then the cash flow statement, this is one that we're not going to go into at length, but I highly recommend you look into the cash flow statement. What this does is a monthly, it goes through all of your income and all of your expenses. It really helps you figure out when you're going to need to cover those shortfalls. So for example, if you're doing a vegetable operation, you're not going to have income in January, February, and March. Granted, if you have a greenhouse operation, it might be a little different, but traditionally. So for those operations, they need to figure out where they're going to come up with that shortfall during those months. Is it going to be through personal savings? Is it investors? Is it a loan? So I really recommend looking into cash flow statements as you're going through the process. I think it'll really help you figure out what you need to make sure that the business can take off and not hit those issues and hurdles as you're going through. So we're going to, like I said, hit 4 main reports. As we discussed before briefly, the cash flow statements I'm not going over tonight, but I think that's one that you definitely want to look at. It gets a lot more in depth, and with the way the class is, it's going to be difficult to just even hit these ones. So income statement, it's also called a profit and loss statement. What this is it's got all of your income, your expenses, and then your net income. So this is going to give you the overall big view of whether or not the business is going to make money. The balance sheet is your assets and liabilities. So what this statement is really good for is when you start looking at banks for borrowing and so forth. They want to know, do you own more stuff than you owe? And that's where you're going to find out on the balance sheet. The cash flow statement, as we've talked about, and then we're going to briefly talk about the budget forecast, and that's really getting into where you're planning to go. Once you start going, how do we take it to the next level? So the income statement, as I said, here's a quick overview. You can see it has income up at the top. This is going to be a kind of running total. So it's going to be a time, so say, for example, this was through July 30th. This is going to then change again in August. And so this becomes kind of a rolling statement. And it's based on a time in the year. These always restart, assuming that you have a fiscal year end, January 1. You have your expenses. Here you can see we have variable and fixed. The difference between those is when you get into your fixed, it doesn't matter how many crops you grow, how many plants you sell, how many vegetables you sell, you're still going to have those same expenses. Your variable move up and down with the crop. So the more you grow, the more those expenses are going to be. So just quickly, the income statement shows if a business is profitable. It has the income, the money flowing into the business, and then the expense, which is money that you're spending. And we went over briefly the variable and fixed. Everybody pretty understanding of those two? Balance sheet, again, we talked about this in the quick overview, but a balance sheet is everything you own and everything you owe. Everything you own is an asset. We break them down into current, intermediate, and long-term. Some places only do current and long-term. At Farm Credit, we do all three. You get into the current assets, anything that's within 12 months that you can turn it over for cash, essentially. Anything a little longer is going to be an intermediate, so your equipment, your vehicles, and then long-term is going to be retirement as well as real estate. On the liabilities, again, a general rule of thumb, current's going to be anything that's due in the next 12 months. Intermediate is going to be around that 5-year range, and anything beyond, again, would be long-term liabilities. And just some good to know calculations you'll see at the bottom. For a net worth, that's your assets minus your liability. What that does is it shows how much you've gained through income in your net worth. So this is typically something that you've earned your way to. So whether it's been through loan payments or savings. Working capital, what that does is it shows how you're going to be able to weather any short-term adversity. So for example, you have current assets minus current liabilities. So any of your cash minus any bills that you have to pay within the next 12 months, are you in the red or in the black? Well, if you're in the red, what are you going to do to overcome that? And then current portion is 1 year loan payments minus the interest paid. And as I said here, successful businesses have both positive working capital and net worth. So working capital is important because it's the cushion for business losses. Shows that you can be able to cover the debt, as well as, and if you don't have positive working capital, it limits your ability to do pretty much everything, unless you have some alternative source. This is just a quick look at what the cash flow statement. It looks pretty overwhelming. This is a sample that we use for our Farm Start programs. And what it does is it calculates all the way down. So in a lot of instances, you won't use all of these line items, but in some you will. And then it includes in the bottom any money coming in from loans so that you would cover your shortfall through that. And I just kind of zoomed in a little just so you could see a little closer. I'm sure the font's still pretty small. And the cash flow statement has income, expense, debt payments, and then available funds in the bank account. So it feeds all the way down to the bottom and shows what your bank account would have in it. And the cash flow statements, as I said, tells you if you're going to have enough money to be able to cover what's happening that month. All right, so the fund, I believe they all have worksheets at the different locations. So we have, we're going to give you some time, probably about 20 minutes. You'll see, here's a case study for Farmer Jane. What you were given was an income statement and a balance sheet. We're going to try to go ahead and fill those out based on the information in here. And I'll be here, so if you have any questions as you're working through, we will come back and fill it out together. And I did give you an extra one so that if you want to do your own personal one at home, you at least have the ability. Yeah. Yeah.
So you would, I guess we're gonna tell them we're gonna sign off for 20 minutes and then come back?
Okay. So we're going to sign off for 20 minutes, and then we'll come back to answer, go over the answers.
We'll be off for 20 minutes.
Why it doesn't mirror itself? It just doesn't. So let me just turn this off.
So you guys might wanna work in groups?
Yeah, you can.
Yeah.
Yep, yep, yep.